Hello traders and welcome to another video analysis. Today is Thursday, October 21st, 2021. Let's take a look at the Forex calendar. Some data had been released overnight, but none of those data were really important. During the London session, we don't have too much important data scheduled for release as well. So what is going on during the New York session? We have ADP non-farm employment change from Canada and new housing price index from Canada as well. Both of them are scheduled for release 2:30. Moreover, we will have a Philadelphia Fed manufacturing index, unemployment claims and continuing claims data from the US scheduled for release as well at 2:30. During the later New York session, we got the leading index, existing home sales, and the consumer confidence data from Eurozone, of course, scheduled for release 4 p.m. And at the end of the day, we got the federal budget balance at 8 p.m. The last data for today is scheduled for release at 9 p.m. and this is the ABA Governor Philip Love will give a speech. So overall, not really busy day ahead for the market participants, but anyway, we will definitely take a look on some interesting charts. The first chart is the US dollar index, because recently we have the US dollar weakness across the board, and that's because we broke below the technical support at 93.70 and we are testing the middle channel line. So right now the local top was made at 94.47. It might look like a kind of a double top here, and the second top was made just above this level. High was 94.53, so that's like a 10 pips higher, but we have a clear bearish engulfing pattern here, and since that pattern occurred, we almost have only a red candle. So we are right now correcting the last move up. Let's see how much we corrected already, how much we have retraced. We have this high, this low, and we retraced 38% of the last move to the upside. So nothing new, nothing serious. It looks like this is a typical retracement during the uptrend. 38% is at 93.52, almost hit. So we might still expect this level to be hit, even if we hit 50% at 93.22 or 61% at 92.92. Nothing really happens with the uptrend. This is a kind of a normal, typical corrective cycle during the uptrend. So nothing wrong is here. The momentum, of course, after the bearish divergence had decreased towards the level of 50. Right now we are trading just slightly below the neutral level, 49 points. So the market is showing us that the bears have a slight advantage on market and might push the prices, of course, lower a little bit. Of course, the deeper we go, the better the bounce will be. So nothing is wrong as long as we are trading inside of this channel and the uptrend is being still continued on the US dollar index. We are waiting for the uptrend continuation, basically. On the US dollar pair, we have a very interesting pattern here inside of the channel. We hit the 1.1662 and the daily time frame chart looks like a typical bounce from the oversold zone, but 1.1662 is the key technical resistance, and right now we are forming again some sort of a pin bar. The last pin bar was made at 19th of the October 2021, and today we are making another kind of a reversal bar, kind of a pin bar on the euro dollar as well. So it looks like if the 1.1613, 1.1604 technical support is violated, then we can extend the drop towards the lows located somewhere around the level of 1.1524, and even then test the level of 1.15. That's the euro dollar. What is US dollar to the Japanese yen doing? As you can see here, wave 3 might be finally completed. Wave 3 might be completed at the level of 114.71, just above this technical resistance, and there is a pin bar candle here. We call this pin bar a doji, which is a long leg doji. It was made into overbought, even extremely overbought market conditions, and today we have some first indication of a corrective cycle coming. 1.1380 is the next target for this correction, and if violated, then we can even go as low as the level of 1.1324 before wave 5 will be made in order to complete the impulsive cycle to the upside. So that's the US dollar to Japanese yen. Let's take a look at S&P 500. What do we have here? A very, very big bounce, dynamic bounce towards the recent high located at 4,551. As you can see, ABC corrective decline had been completed, and the market is heading towards the last all-time high. So nothing really changed here. The bigger picture shows us that this decline, even it was 6%, it was nothing but another decline, another correction, another pullback during the uptrend. Nothing is wrong here. The middle line kind of defended itself, and now we have 1, 2, 3, 4, 5, 6, 7 days in a row, 7 trading sessions in a row of advance on the S&P 500 index. So nothing is wrong with the uptrend on S&P 500, and we should go above the level of 4,551 soon. And last but not least, what is going on with Bitcoin? Bitcoin made another higher high. This higher high is another all-time high. And this all-time high was made, as you can see here, at the level of 66,938. Right now, it is a time for a correction. So the correction, let me just adjust the Fibonacci retracement. Maybe we will put it here exactly. The correction might go lower, as low as 56,950, where is 38% of the Fibonacci retracement, or it can hit all of this retracement levels as well. But please remember, there is still one more technical support. The immediate one is around the level of 62,517, and the other technical support, let me just take a look, is around the old wave B high, which is around the level of 59,528. So those two technical resistances might provide enough support for the wave 4 to complete. We will see what will be the form of this wave 4, whether it will be a triangle, maybe more complex correction, and then of course wave 5 is here waiting to be made. So this is not the end of the market rally in the impulsive cycle on the Bitcoin. More is to come. The target for the wave 5 is around $72,000. So that's the current wave progression for the Bitcoin for the incoming days. Thank you very much for watching this analysis, and I hope I see you guys tomorrow. Bye bye.